Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow.
It's 4 p.m. in London, 5 p.m. in Rome, but it's 11 a.m. here on the East Coast, which means it's time for Market Call. That's Dan Nathan. I'm Guy Adami. I just got my haircut. Took the you-know-what down, Dan. By the way, if it's Wednesday, it's yes, Butter. It is. It's Butters, bitch, and we have a lot of John Butters coming your way. What?
By the way, we have dueling haircuts here, and
you know, back in the day,
all the listeners, all the viewers, they know Amanda Diaz. AD used to be in our ear for years at the Fast Money and the options action. Used to, and every time I got a haircut, she was like Johnny on the spot. She'd be like in my ear. She'd be like, "Dude, great haircut," but she doesn't do that anymore now that she's now that she's running the show over here. But whatever.
She got bigger fish to fry, as they say.
Guy, I know we're not allowed to use this term, or Timmy's going to make a little meme or something like that. But interesting day today. You know, like so yesterday, was it yesterday or Monday was the lowest vol day, like the range in the S&P, I think going back to October. Okay, which is interesting because we had some vol, you know what I mean, around the election and after the election, it was a one-way train. And then January, you know, like the fact that we've had this crazy, 2-3 week period and then just a sideways day. And that's why I think like waking up today, and granted, the news was out last night. So, and what is it? One headline about Nvidia orders could do this to the NASDAQ. We're down nearly 2% and we're down 1% in the S&P 500. That is not something I would have expected, except for the fact, and we've been saying this for a while, the fever has broken in this generative AI chip trade in particular, and I guess you could have made that argument after Broadcom, after Marvel, you know what I mean? That sort of thing. But this is like a sell the rips, man. You got to that point in the QQQ. You touched that 200. Thoughts there, Guy Adami?
I agree with that, and that's something we've said for a while. And I don't think it's necessarily the magnitude. I think they took what you said last night, a $5 billion charge, which is not insignificant, by the way. But I think it speaks just to this ratcheting up. I mean, the continued whatever word you want to use in terms of what's going on between the United States and China, and who finds themselves sort of in the crosshairs of this thing. And today it's Nvidia, tomorrow it could be Apple. By the way, Apple seemed to be winning over the weekend. We're going to talk about Apple in a second. I mean, that's given the entire move back and then some. But you're right about Nvidia, and all rallies have seemingly now sold. I was encouraged, and if you want to put up an Nvidia chart, Amanda, real quick, we looked at it yesterday, that it traded down to sort of that August low. You can draw that horizontal line, and we bounced. That's exactly, by the way, what should have happened. And to a certain extent, that's what we thought what would happen going into it. But the bounce is not all as sort of, vibrant or energetic as I thought it should have been, given how everybody loves this name. And your eye can see this bit of a down channel we've been in effectively since January. You can see that entire channel, lower lows, lower highs. If this thing, obviously, if this is the next iteration lower, and if we were to break 90, then the question is, all right, what are we looking at here? What's going on? And the valuation that everybody championed for so long, which looked cheap, might actually start looking expensive, oddly enough, when you start to think about maybe some margin contraction and things like that. So I think you're right to point out that this trade, the bloom is clearly off the rose.
Yeah, and when we get to Butters, we're gonna talk about Nvidia's earnings contribution to the S&P 500 and from a growth perspective also. And we've been talking about this. So to your point about it could start looking expensive, I mean, I don't think numbers have come down materially for this stock or for this company right now, and that's the thing that kind of I think that flips the switch a little bit. And we've been kind of harping on their major customers. It's OpenAI, it's Meta, it's Amazon, it's Google, it's Microsoft. Microsoft's already taken their foot off the pedal as it relates to CapEx spend. Now, is the CapEx spend mean chips at this point? It could be building out data centers, and they already have the chips and the like here. But we're going to get a sense for that when all these companies report in the next couple of weeks. And I suspect, and you suspect, and we've been talking about it for a couple months now, that we're going to see a pullback, especially as you see a deceleration in these guys' revenue growth, which is what we saw when they reported Q4 earnings, which is why the stocks all sold off. It's also why Nvidia has been stuck in the mud. So again, AMD also taking a charge for these export curbs. And, this is one of the things that I think you and I and a lot of folks in the markets, a lot of folks who just follow politics, super critical about this policy. Like, it ended up being, at least in first blush, this is the tariff policy, right? Far worse than a lot of folks expected, right? It was far worse than the fact that they started with Mexico and Canada and the EU, right? And not just focus on China. And I think what's happening here is that, folks are really starting to say, okay, like, even if we don't think it's going to be the worst case scenario, they've threatened the worst case scenario, which has kept corporates, just sitting on their hands. And so I don't know how you turn this around so quickly, even if they backtrack everything. If they backtrack on everything, Guy, I almost think that's worse. Like, what does it say about our negotiating power going forward for anything?
That's, until something, look, the bond market scared them last week, clearly, and they backtracked on the back of that without question. You can equivocate all you want. You can try, the administration can try to sort of soft talk it and say it wasn't they didn't acquiesce, but the bond market scared the what out of them. And if something else were to happen along those same lines, a continued weakness in the US dollar, whatever it is, there are a number of different things, something will get their attention again. And whether or not they want to sort of bend, it's not even the point. They're going to be forced to. But to your point, if it's toothless, if the market starts to sniff out, there's not a lot of grip to this whole thing, then what are we doing here? What is the end game? And I think in some ways it could actually be worse than initially thought. We'll see how it plays out. Look, they're going to try to declare victory at some point without question. There'll be a faction of people that believe it, and there'll be a faction of people that don't believe it. And that's just the world we live in right now. The real importance is, what does the market believe? And I got to tell you something. Right now, the market is telling a much different story. We sent something around earlier today in what do they call that, Dan, when you have a bunch of people on a chat?
A group chat, Guy.
Oh, group chat. That makes sense with a group of people.
And
we saw what Rick Reeder sent out, or he talked about earlier. Amanda can pull this up on the fly, but this is not insignificant here. He's talking about, basically, we're already in a recession, I think, is one of the things that he said. He's looking to bolster his cash position, and, he's not all that optimistic about things. This is a pretty important guy making comments that, we've talked about a lot of this stuff. And again, I don't know if we're in a recession. I'm not an economist, but I do know things are slowing down in a pretty significant way. And I do know, regardless of what people think, this market is still pretty darn expensive.
Yeah. So just to be clear, Rick Reeder is the chief investment officer of global fixed income at BlackRock. So obviously BlackRock is the largest asset manager on the planet. Really smart guy. And I don't think, and I know you know him, he's not a hyperbolic guy. You know what I mean? And
not at all.
I think a lot of folks are really trying to be, trying to be measured. Okay. So I just got off the phone with a friend of mine who runs an asset management firm here in New York. And, he just said to me, I was in a closed door meeting with Jamie Dimon since their earnings. It was 50 sort of customers of them. And he sounds differently behind closed doors than he did on their call. And, you called it, actually. You said 2 weeks ago, you're like, when the market was ripping over the last, couple years, Jamie was cautiously optimistic. And it was something that was definitely in contrast to, let's say, Moynihan from Bank of America and the like here. But you also thought, as things got a bit rockier here, into this print that they just announced, that he was not likely to show that same caution because he wanted to be a bit more measured. So it is interesting, though, behind closed doors, Guy, that he made that commentary. We also know that some of his commentary about trade, tariffs, and the like was one of the things that hopefully influenced Trump and the administration to kind of back off the worst case scenarios. And that happened, a week and a half ago on that Wednesday, when things were a bit haywire.
Well, President Trump said, he said that he saw Jamie Dimon on with Maria Bartiromo, and he took all those comments into consideration. By the way, good for him. I will say, and I said that on Fast Money that night. And he also said that he saw what was going on in the bond market. Good for him as well. Whether he saw it or somebody told him, it doesn't matter. They were aware of what's going on. So I'm encouraged by the fact that they took in data and, adjusted accordingly. But, that's sort of small solace, I guess, because since then, things seemingly continue to get ratcheted up. And I'll say, I don't know what the end game is here. And quite frankly, I'm not sure they necessarily know what the end game is either. But more importantly, the market's got to come to the realization now, wait a second, in this environment, the earnings expectations, the EPS for the S&P 500 is still way too high. And when I say way too high, probably 15 or 20% too high. So when that comes down, which it will, then it starts to question, all right, what are the multiple you put on it? And you can start making this about math and say, you could easily see an S&P that, finds a home somewhere between 4,250 and 4,500. And that's not me being hyperbolic. And quite frankly, historically, that's not out of the realm of normalcy in terms of a peak to trough decline.
Yeah, and just on the S&P number, I think consensus was like 274 or something like that. We have had some folks coming down to 255 or so. So that's high single digits. Like, to get down 15%, or you'd have to be on a full-on recession, right? Like we can agree. I'm just saying like that. So a 10% on 274 gets you to 250, which is kind of flattish, year over year. But to your point, if it's 250 on an S&P that's trading at where are we right now? 54, 53.44, you can do that math there. It's still, inexpensive. It's still above 20, right? Like, and again, in our main man Butters, he's tracking this for us. I want to make one other point about the economic agenda by the administration. And one of the reasons why they won. They won because he talked about bringing taxes down. He did talk about tariffs, but not like this. He talked about deregulation. I mean, there was all this sort of stuff. And he talked about bringing the price of eggs down, like that, as as just the price of goods that people consume. So think about what's going on here. The trade and the tariff stuff's worse than expected. It's causing a slowdown in economic activity. It's causing prices of stuff to go higher. It's likely to cause a weakening in the employment market. I mean, like, think about this, right? And then on the tax front, you see the headlines here, man. Like, they are not going to be able to put through the sort of cuts that they want, because if they don't have commensurate, spending cuts, right? And where does that come from? That comes from Social Security, Medicaid, Medicare, and that will not pass, as far as I'm concerned, as far as both sides, right? So all of a sudden now you have the situation where they talked about bringing corporate tax rates, which they brought down from 35% in the first administration down to 21. And on the trail, the campaign trail, he talked about bringing them down to 15. So that there's talk right now that they may not do that. There's talk that they're going to raise taxes on wealthy Americans above $1 million in income, right? So these are like going ass backwards about what they're saying. And then the last thing I'll just mention about deregulation, Mark Zuckerberg, that feckless what that starts with another F, he's in front of Congress, or he's in front of the FTC, like, you know what I mean? And talking about how to make the case that he's not a monopoly. Now, I don't think the merits of that case are particularly good. You got to go back to 2012 when they bought WhatsApp, or 2014 when they bought WhatsApp and Instagram in 2012. I think it's stupid. But at the end of the day, if the FTC, it has been reported that they try to settle this, you know what I mean? If the FTC is saying no to a settlement, well, you know who's behind that? It's Trump. Of course. You know what I mean? So, like, when you think about it, all of their economic sort of policies have actually gone haywire right now.
Well, I mean, I think Mark Zuckerberg is learning, some other people as well, quite frankly, is, you can't really buy the protection that you think you're buying. And I think he's finding it out in real time. And pull up a Facebook chart a little longer term, Amanda, and you'll see, this 504 level, if you go back to, I mean, you can draw that horizontal line across. And it's a pretty big level right there in terms of, where we've seen, I was looking at it in terms of the lows from September of 2024, if you want to draw that horizontal line across. But we're basically looking at the same thing. I mean, we're getting down to some pretty big levels right here. So we'll see. Facebook obviously does not trade particularly well. And I think, I don't want to say he's ruining some of his decisions, but, he's definitely has not read the room particularly well.
No, I mean, and they've been scurrying around. And the other thing is, there was a lot of folks when they were talking about the cooling out of this generative AI trade, they were pointing to Meta and their ability to kind of harness this technology to kind of increase margins by better ad targeting and the like here. And you've been saying this is like advertising, Digital advertising is a very cyclical thing. It's very dependent on the pace of the economy and the like. And it's been a one-way trade since the lows in 2022, when the economy, last time we were really kind of worried about the potential for a recession. But, here's a headline, and maybe Amanda can pull it up or we'll put it in the show notes. But this is yesterday. This is Omnicom. Omnicom is the largest advertising company, I think, in the world, by the way. Okay. They miss numbers. Okay. And they're basically like, it's a soft advertising environment. When this company is basically missing and giving kind of murky guidance, you have to extrapolate that to some of the digital, you know what I mean? The digital, ad companies, which is obviously Meta, and it's obviously Google. So this is something to kind of keep an eye on there.
No, listen, how many times have we said that, as Teflon as Facebook seems to be, and as well as they've been operating, obviously, until recently, they can be subject to a downturn like any other company. And when, 75 or better than I do, but 75% of the revenue is ad-based, ad-driven. I mean, and in that revenue, I bet that 65 or 70% of that 75% is from small and medium-sized businesses. Yep. I mean, what do you think's happening here? I mean, things are slowing down. If things slow down, what happens? People pull back on ad spend. So Facebook is not sort of inoculated from that either. And you're starting to see this all in real time. It's so, I guess the point I've been trying to make for a while, maybe sometimes clumsily, maybe not, is as much as people want to make it out to be the tariffs, it just came at the exact wrong time, because it came around the same time that things were starting to slow down in a pretty meaningful way. So you couldn't have timed it much worse, quite frankly.
Yeah, and the last thing we just got to add is the TikTok thing. I mean, this is obviously no, I know, but this would not be good for Meta if TikTok was in the hands of, let's say, some large U.S. company that was able to then really start to flex and put their pedal to the metal.
Well, what's interesting? Yeah, I'm sorry to use a word, but yesterday I think it came out on our show, or Melissa said something, or Zuckerberg. In reference to TikTok, I think the comment was, and I'm somewhat paraphrasing, what every teenager in the world knows is that Instagram doesn't compete with TikTok, which I found to be, I don't know, sort of odd. Yeah. You are competing in some. You can only watch, or maybe people can multitask this shit. I have no idea, but you're either watching one or the other. So they have to be, by definition, competing.
Well, not only that, I mean, Instagram Reels is their biggest sort of growth engine. And one of the criticisms is you used to go to Instagram as just a file share or a photo sharing thing. You'd see the photos of the people you followed, and there was going to be some advertisements. But now they're just pumping all different sort of TikTok-y things into your feed. So I am with you there, Guy. Should we go to Butter?
Jimmy, real quick. No, we're going to go to Butters in a second, but this is good. I love this. Carter Evans, Amanda, throw this up. Carter Evans says, Dan, that interview with Josh Wolf was good. Tell us where we can hear that, Dan, because you sat down with Josh yesterday.
Yeah, so Josh is the founder and managing director at Lux Capital. This is a VC firm here in the U.S. He is a brilliant guy. By the way, he went to Cornell with Andrew Ross Sorkin, guy.
No.
They are good friends from Cornell.
It must be, boy, those two must have been, what, like in a gang together?
No, you would love this story. He grew up in Coney Island. His parents were split up, came from nothing, got himself to Cornell. He's a brilliant guy, was like kind of in banking for a little bit, but then went into VC, and he's done an amazing. I mean, like he's one of the earliest investors in Anduril, which is one of the hottest defense tech companies, worth $28 billion now. I think he invested under $100 million valuation. Genius guy. We talked about a ton of different macro stuff. We talked about who are the companies in the private markets that are disintermediating, some of these big, publicly traded names, where the innovation is. We talked some politics. We had a really great conversation. So check that out. Risk Reversal Podcast in your favorite podcast store. Leave a review, share it with friends. Whatever they do, that helps people find it. Doesn't that help people find it, Guy?
Discovery, they say. By the way, this is from Wavy McFly. This is going to piss you off.
Uh-oh. I see it.
Yeah.
Guy, better hair and better shirt. Interesting. I mean, I would prefer the better hair, but the shirt is the shirt. Thank you, Wavy. Thanks for being here again. All right, let's do this, because I know this is probably one of your most favorite segments of the week on the Market Call. If it's Wednesday, we get a look at John Butters. He's the senior earnings analyst over there at FactSet. He writes the Earnings Insight blog. It drops every Friday in your email box, they're going to put up where you can get this. We get a preview of it on Wednesdays. There it is. It's insight.factset.com/subscribe. Guy and I, we've been reading John Butter's work for years and years. Obviously, FactSet has been a great partner of ours. One of the things that we love about his work is they're tracking these really important data sets week over week, and they kind of crescendo into earnings season. And then they do a lot of great work on the flip side of it, kind of processing a lot of the information. So to me, this is the time that this work is so important, although it's important all the time. All right, guys, let's break down what John's looking at this week. All right, of the top 5 contributors year over year, earnings growth for the S&P 500 for Q1 2025 to our magnificent 7 companies, Nvidia and Amazon. Overall, the blended actuals plus estimates earnings growth rate for the entire S&P 500 is 7.4% for Q1 2025. The Mag 7 companies are projected to report earnings growth of 15.7% for Q1 2025. The blended actuals plus estimates earnings growth rate for the other 493 companies is 5.2% for Q1 2025. Now, we've been talking about this with all the strategists that we've had on the Risk Reversal pod. It's still really skewed to the Mag 7.
Ridiculously so. And the question you have to ask yourself is, what are the other 493 telling you? And as much as people want to say there was this broadening out of the market and you had vast participation, maybe with some stocks you haven't had that participation in terms of what the most important thing is, earnings and earnings growth. And you don't have to listen to me talk or Dan. I mean, just look at this chart and it says that already. So when you're seeing that number, you're saying to yourself, wait, there is a pretty market slowdown here. And the market probably is still way too enthusiastic. And then the next question you have to ask is, okay, what happens if the other 7 stocks start to see contraction for whatever reason? And by the way, that could happen. So, and to a certain extent, that 5.2%, that number can get ratcheted down from here as well. So this visually tells the story of what we've been saying for quite some time. It's the market is being dominated by 7 to 15 stocks, specifically 7, and the rest of the market is just sort of plodding along at best.
Yeah, so this next slide actually tells the story also, and we'll hit Nvidia one more time here, but give me a second. For 2025 versus 2024, analysts expect lower earnings growth from the Mag 7 companies and higher earnings growth from the other 493, which is kind of what you just talked about, but the sanctity of the earnings of the 493, not particularly great. We're likely to see retail-oriented names, discretionary names really kind of fall off the cliff, right? At some point, financials, despite what they just had to say, the major money centers, they're going to actually see some pressure if we start getting into a recessionary environment. If unemployment, as you've been talking about, starts to tick higher, you're going to see that across the way. Talk to that for a second here, because those are the things that are not modeled into these estimates right now.
Nobody's modeling unemployment. I mean, without question, because again, you listen over and over again and you hear about the health. You listen to Brian Moynihan from Bank of America. You hear about the health of the consumer and how strong things are and the robust nature of the job market. But then you sort of look under the surface and say, well, wait a second, maybe there's some sort of dents in this armor and maybe things are starting to sort of deteriorate right before our very eyes. And oh, by the way, and this is something we've said over and over again, and now people like Steve Leisman and some other economists are talking about it. If companies start to feel margin pressure on the back of the tariffs that we talk about seemingly every day, first thing they're not going to be able to pass those costs, I don't think. So the first thing they do is start to fire people. I mean, that's just the way it works. I hate to say it, and it sounds callous as hell, but that's what's going to happen. And you've seen it. I mean, you mentioned Stellantis last week. It seemingly comes out, I don't want to say on a daily basis, but a few times a week, you hear about layoffs after layoffs after layoffs. And it's just a matter of time before it just makes its way into the unemployment rate. And I think it's going to surprise people. That, by the way, on top of inflation, which is still stubborn as hell. And that, by the way, on top of growth, which is slowing down. By the way, the unemployment picture was sort of the final piece to the whole stagflation puzzle that we had started talking about a year and a half ago, along with Danny Moses. So that environment is sort of the worst case scenario for central bankers. And quite frankly, it's probably the worst case scenario for the administration, because you can't cleverly, artfully get yourself out of that one.
Yeah, and we've been making this point about like the threat of the trade war is like once you kind of start getting, or start seeing a slowdown in activity, whether it's capex, whether it's hiring, it's R&D, and that sort of thing. It's really hard to turn that on a dime, especially the pace in which these folks have been kind of really erratic about like kind of announcing policy and following through with it. And like the estimated earnings growth rate for the entire S&P 500 is 10.2% for calendar year 25 versus 10.6% for calendar year 24. Coming into this year, I think the number was like 13.5%. So you're starting to see those numbers come down. It's 16.4% for calendar 25 versus 36.5% for calendar 24 for Mag 7 companies. So you see that huge spread between 16, and the other 493 companies are projected to report earnings growth of 8.5% for calendar 25 versus 4.9% for 24. Guy, you mentioned this in Nvidia, and we can kind of move on after this. The earnings estimates for Nvidia have not come down. I mean, it's still expected to be up like 50% this year. So if all the things that we were just kind of started the show talking about, whether it's these export curbs, whether it's, just weaker demand for CapEx, for data center and the like, I mean, those numbers are going to come down. And, when you think about the earnings contribution for Nvidia last year for the S&P 500, it was not insignificant. And 25% of the S&P 500's gains last year that were up 25% came from Nvidia, based on the idea that estimates for the current year last year, the out year, and even for the out year, which would be 26, were too low. You know what I mean? So that narrative kind of goes by the wayside in the not so distant future for a protracted trade war and then some sort of like, chilling out of this generative AI trade.
The promise for this year for Nvidia, as stated on the last earnings release, was that although margins declined, and that's something, by the way, that they telegraphed, they were confident that margins would reaccelerate in the back half of the year. That was the promise, and that's why the stock sort of hung around for a period of time. But I think with each passing day, I think people are starting to question that promise more and more. And you talk about this all the time. When margins start to contract, especially in that space, it rarely, if ever, starts to reaccelerate. And once that starts to happen, it becomes sort of this cascade where that price to earnings ratio, which seemed reasonable, all of a sudden starts to get expensive. And then people start to look more closely at the price to sales and say, well, wait a second, maybe this should be trading more historically a 5 or 6 times sales. Because right now, if I'm not mistaken, and you probably have it in front of you, I think Nvidia, even with the sell-off, is probably trading at about 11 times next year's revenue. And that's off the top of my head.
12.5 times this
12
year.
and a half times.
10 times next. 10 times next.
There you go. It's pretty close.
You kind of nailed it. But expected earnings growth of 50% year over year. Same for sales growth. So again, that looks really cheap at 23.5 times this year and 18.5 times next. But let's see how that holds in there. Guy, we got to talk about the macro for a second here. We've been talking about the U.S. dollar, the weakness of late. Maybe Amanda can pull up the Dixie. It has not seen much of a bounce, despite the fact that we've seen treasury yields come down a bit, and we were talking about the inverse relationship that was happening over the last couple of weeks. Usually you would see, yields follow the dollar or vice versa, right? And so we saw that sort of bifurcation. So the dollar has no bounce. We've seen
no bounce.
10-year treasury yield come down from 4.6 to 4.33 or whatever we are right now. Is this one of the things that is basically calmed the market, the stock market, a little bit over the last few days? Now, excluding today, I guess.
The bond market clearly has. I mean, the move lower, and listen, the bond market was melting down, and now I am choosing to use that expression. I think it was Tuesday night or whatever the hell night it was. The bond market was absolutely melting down, and the fire alarms were going off globally. They were able to stem the tide. What they have not been able to stem is the weakness in the U.S. dollar, which I think should be concerning for everybody. By the way, I'll say this. I think part of the plan all along has been to sort of get the dollar lower, because when you have $37 trillion in debt, one of the ways to sort of help ease the pain there is to lower the value of your currency. So right before your eyes, this is part of the plan. Now, I don't think part of the plan was to sort of blow up the bond market. Maybe that was sort of some, tangential ancillary thing, but they go part and parcel, quite frankly. And I think everybody should be concerned. This is just my view, but everybody should be concerned about this weakness in the dollar. And I'll add this as well. Whether you want to realize it or not, whether economists want to talk about it or not, it's a weakening dollar is inflationary as hell. It's a hidden tax for you people because you just have less and less buying power. I mean, that's just factually true.
Which goes back to 2020 and 2021, right? Interest rates were brought down to zero during COVID, and then we had all this fiscal stimulus, and then we got all the inflation. I mean, it wasn't so hard. And, one of the things, normally, I mean, when we've gone into that Fed playbook of zero interest rate and QE and all that sort of stuff, I mean, one of the main reasons is actually, to weaken the dollar. But on the flip side of this is that gold has absolutely gone batshit crazy, right? And you've been talking about someday you're going to walk in, you're going to see it up 100 or whatever. And today it's up 50, or maybe a little more. Big move, making new all-time highs. You see that sort of move on a one-day basis. Like, speak to this guy, because this is really getting, I think you could say, overbought on an RSI. Look at the distance between its 200-day moving average, which it has not sniffed. Let's put up a 5-year, Amanda, if you can. It has not
a long time.
Yeah, but why is this correlation, weak dollar, strong gold? Why is that making some sense and some of the other ones are not?
I was watching the Squawk and Friends this morning, and Joe Kernan was sort of talking about Bitcoin and the performance of Bitcoin since inception, something like 20 million, some ridiculous number. Yeah. And then he said, how I hear from these gold people all the time, and it's not necessarily, and this is just, again, me, but it's not necessarily the performance of gold. It's what it's signaling that people should be concerned about. And why are central banks for the last 4 years now buying gold hand over fist? And why have the Chinese specifically been buying gold at a record pace? And why are these countries all talking about, repatriating their gold reserves and bringing it back to their shores? What do they all see? And what does it really mean in terms of sort of this global macro thing and, the value of the dollar and the standing of the dollar? That's what gold is telling you. There is concern out there. There is consternation out there. And there's a clear lack of confidence out there about what's going on in the United States. Because if people felt good about what was going on here, you would not see this type of move in the gold market, in my opinion. So whether you want to talk about percentage moves that it's not keeping up with Bitcoin, okay, that's fine. But it's what it's telling you, I think, is far more important. And that's the point I've been trying to make all along.
Yeah. And let's pull up the Bitcoin for a second here, because CNBC.com had an article this morning. And it is interesting. I mean, despite the fact that it's not participating to the upside the way gold has. So there's definitely, this whole idea of nerd gold. It's kind of breaking down a little bit. And, one of the things that, you and I have been talking about Bitcoin, and the reasons and why it should work, for 7 years. We've monitored all these guys, all the degens, as they call them, or these, what do they call them? What do they call them? What were the hands? Something hands.
Diamond hands,
all this sort of stuff. Almost every use case or every pillar of the bull case, let's say it that way, since 2017, at least since as long as you and I have been talking about it on Fast Money and people won't shut up about it online, almost every single one has fallen by the wayside. It's not a currency. People don't use it to transact. Is that a Bitcoin technology? Is it this grace like base layer to do all this other stuff and build on top of it? No. It's really slow. It's expensive to transact. There's big ass. There's like complications about how you store it, all that sort of stuff, right? They all suck. Okay, let's be frank. All right. So then it just comes down to, is it a good store of value? And that's what Joe, I think, is talking about is, look at the performance since its inception, 15 years ago or whatever the hell it is. And that's great. But what does it do for you right now? Okay, so you'd say it's a hedge against a weakening currency. Fine. The dollar's gone down 10% in the last, 2 months or something like that. Look at this thing. It's down from 6 and, down to 85 or something like that. So you have to have this religious belief, you know what I mean, that this is going to do the thing over the long term. You also have to be so bearish on the US dollar, which actually makes you so bearish on US exceptionalism, right? It makes you so bearish on the idea that the US dollar is not going to be the reserve currency of the world, all those sorts of things. You actually have to be in like one of those doomer camps, you know what I mean, to think that this is going to be the thing. Does that make some sense here? Or maybe being a little hyperbolic?
Maybe a little hyperbolic, but you're making your point pretty well. I think you have to have some belief that obviously the concern around fiat and now specifically the US dollar is leading everybody to Bitcoin. And by the way, and this is something we've talked about, Bitcoin was created probably right around the time of the financial crisis when central banks really started to run amok. And you can sort of overlay excessive central bank behavior with how well Bitcoin performs or how poorly it performs, quite frankly. So it makes sense. What doesn't make sense, though, to your point, is how poorly it's traded since the start of the year, quite frankly. And now you have to say, all right, if you're looking for catalysts, what's the next catalyst? Because we're through the election. We've heard all the things the administration is going to do or not going to do around cryptocurrency. So that's in the rearview mirror. I mean, what's really next on the crypto front? I don't know the answer. Obviously, you have strategy buying Bitcoin seemingly on a weekly basis. I mean, that provides some support. But, what's the next real catalyst to the upside? Again, and people say there's a scarcity factor, which should – there's a scarcity factor of kindness, but that doesn't have any value at all in today's world. So the whole scarcity thing to me never really held a lot of water.
Yeah. So here's the thing about Novogratz. So Mike Novogratz, he runs Galaxy Digital. It's a crypto like a bank, basically. I mean, they facilitate trading and a bunch of other stuff. And, Nova's been on our pods. He's been on Fast Money with us. We think he's a brilliant guy. He's a really smart macro guy also, but he's gone all in on the crypto stuff. And this point is that it's trading like the Mag 8, which we would just call the what guy? You kind of coined this one.
What do we call that? The fruitful 8.
The fateful 8.
Fateful 8.
You know what?
Fateful
just because
8.
I come up with something that I think is clever, you don't have to shit all over it. Okay?
I forgot. I didn't shit on it. I really forgot. It's like the movie.
By the way, so this is actually cool. It became from the Mag 7, which I had nothing to do with, which I renamed it Fateful 8, because when Broadcom in December entered the $1 trillion club, that's what we were going to call it. The fate of the market was in the hands of those 8 stocks. But what's interesting now that Broadcom's underneath that $1 trillion, I think what Novo's doing, he saw what Dan Nathan was doing, he liked it, and now he's putting Bitcoin in there. Now, the thing about that is, I think what he's referring to is that it is heavily correlated to mega cap tech stocks, which it was not supposed. It was not supposed to do that. It was supposed to be a hedge against all the other crap that's going on in traditional finance. They call it TradFi, guy. TradFi. You should start using
TradFi. We could have just called it the Ocho, and that would have been badass, right? You could have been like, say the Ocho. What's going to happen when they get to 9? Like, you got to come on. You should be ahead of the curve with this one, by the way. You should start thinking about
next. I've been in this camp. Like, you can be as bearish as you want on the generative AI trade, on the concentration of these names in the S&P 500. Like, listen, 5 years from now, like a couple of these in the Fateful 8 are going to be $5 trillion market cap companies. You know what I'm saying? Like, a couple might fall out, but your guess is as good as mine who the next one is. And this brings us to Netflix, because Netflix, the Wall Street Journal was reporting that. So I thought this was super strange. We're on the desk of Fast Money. This comes out. The Wall Street Journal is reporting that Netflix put out some targets 2 days before their earnings. I mean, like,
that was odd.
It was very odd. But the thing that I found most odd, guy, is that they actually were guiding to a market cap number by 2030. And, you and I talked about it on the desk last night. I don't think I've ever seen that. Okay. I don't think I've ever seen a company this well established and everything guide to that, because to get to a market cap, there's a lot of interesting inputs that have to happen, right? There's got to be multiples. There's got to be earnings growth. There's got to be comparative valuation to the market, to its peer, like to arrive at a number like that. So, and long-term growth rates and the like. And so I just thought that was really strange.
I agree with that.
That is kind of,
I found it odd as well. And I found it odd, the timing. And you hear from strategists and investors all the time that want to throw a potential market cap on companies. I mean, we sort of take that with a grain of salt, but when the actual company does it, it's somewhat out of the realm of normalcy, but nothing is today's world. I mean, it's like a free for all. So it surprises me, but I guess not as much as it probably should.
All right, so you've liked this name for a very long time. So here's the 1 year, and this is what is fascinating about charts in particular. Some people find them useful.
Listen, the fall of 21 into early 22 was a disaster.
Yeah, it sold off 70%, just like Nvidia did, just like Tesla did, just like Nvidia did. And people have very short memories about this. Let's pull it out.
Longer term, Amanda, you'll see. I mean, it's brutal.
And since then it's like a 7-8 bagger, and so those huge gaps on the way down, there were some huge misses as it relates to subs, higher than expected churn, higher costs with original content. But they seem to have figured it out. And so they've gone to, password crackdowns, ad supported tiers, and they've been able to raise prices, and they've gone into some new content like live sports, which has driven subscriptions and the like. And so look at that thing. I mean, it kissed its 200-day moving average. I want to say, what was that, in late 23, and then it's just held it like a what guy?
Like a boss.
Like a boss. Like maybe it's making a little flag here. I think you guys talked about it, you and Karen. It's getting a little expensive at 40
Well, it's got, let me tell you something. See, it was in February, which again, it's not that long ago, but that's when it made its all-time high. I think 1,064 or something. Yeah. Obviously, we sold off, as you just said. We basically went down, kissed the 200-day. Now we're back on the horse. So for you armchair technicians out there into earnings, it's almost imperative that you close above that and create a new trading range. If we were to trade up to it and fail, that won't be good. And if we sort of stall out here, that won't be good either. Now, I want to be clear. Like, I think this stock is going to go through that level. That's my view. But if you think about it, though, if it doesn't and it fails there, yeah, it's no bueno. And if it doesn't even get there over, in the wake of earnings, then you got to pull the ripcord.
I'm hard pressed to see the sort of quartering guidance, especially now that they don't give subs anymore, that like causes it to break out above those prior highs, which is what is it, 1,064. I want to go to a 1 year, because we were talking about that 200-day. Look at the low from January and look at where the intraday low was. You see that. You see the 200-day moving average. You could draw that line there. I mean, that is some important technical support, right? If you go through there on a miss, and hey, listen, this company we talked about, this is not recession proof. Like, again, you'd say $16 a month or whatever it is. If you start to see a mix shift that moves back towards that like lower end, that ad supported tier, they're not going to give you subs, but you'll see it in margins and the like. This stock could easily go back to $700. And you're looking at that gap from last October on their on their Q3 earnings or so. So, I mean, listen, I think it's an interesting range. I think the 1 year chart looks pretty decent. It looks like it's been consolidating, although it's been volatile in this range between, like, call it 800 and 1,050 or 60 or something like that. But Carter might say it's a pair of twos.
You may. Real quick. You're a fan of Neil Young? I know you are, because you had tickets to see him.
Horse and CSN and Y.
Sure. Yeah. Well, Neil Young had a song, I think it was off the Russ Never Sleeps album, if I'm not mistaken, called Cortez the Killer.
Oh, yeah.
From Jason Cortez. Amanda, please throw this one up. I just bought puts on the GDX. Way overbought. You know what? Jason, I love that. Good for you. You're right. It is probably way overbought. I'm just looking at it now. But man, oh man, it's a tough one here. I guess in some ways you're looking for maybe a pullback to 45 or something ish, trading 52 now. Mm-hmm. But short leash, baby, short leash. I think if I'm being honest, which I try to do, I think at some point we're going to be talking about a GDX that's in the mid 60s, which is the level we saw in, I think, the fall of 2011 or so. I'm not saying it's a straight line there, by the way, and I admire Jason, or JC as it were. I admire his Dan, but yeah.
Yeah. All right, let's do. I know we got to get out of here in 2 minutes. I want to do two last things. I want to do American Express. They report tomorrow before the opening.
AXP.
It comes out. And I want to do. There's something.
We have a question, by the way, from Ian on AXP, so that's perfect.
And then I want to do. The S&P really quickly. All right, so let's talk about American Express. 4% implied move in either direction. Obviously, we talked about it, I think, on Fast Money. I don't mean obviously, but LVMH, bad numbers, high-end consumer. American Express levered to that sort of consumer, levered to business, travel, and the like. Here, I'm just hard pressed, guy, in this environment, and especially given the uncertainty around trade policy, given the uncertainty about travel from businesses here, but also folks coming here, right? Like from we're hearing this from Canada, people are canceling trips in the EU and the like here. I'm hard pressed to find a reason why you want to buy American Express right here.
Well, I agree with you. Number one, I think valuation is, even with this move, is probably still a tad expensive. If you listen to what JP Morgan did or said about their loan loss provision, I think that should have opened some eyes. I think American Express lives sort of in that world. I think almost by definition, they're going to start to see their delinquency rates go up, I think. And that's not, to me, a great environment to be in right now, especially when credit risk should be a concern. And American Express, unlike MasterCard and Visa, has credit risk out there. Now, the stock has sold off, and it makes sense to me. But if the environment is slowing down the way we think, regardless of what you just heard from United Airlines and some of the others, yeah, American Express won't be spared from this.
Amanda, will you throw a 50-day moving average? So that yellow is a 200-day, and this is going to take me to the S&P 500 for a second, Guy. And listen, this is a term that's thrown around.
I mean, she flies around this thing. I know, death cross.
All right, but it gets headlines. And when Amanda was producing at CNBC, she probably put the death cross up there.
Oh, she's smiling right now.
Yeah, she is smiling. So that's the 50-day. It looks about like it's going to cross over. The 200-day bearish. Okay, you're seeing a short-term momentum shift, that sort of thing. Let's pull up the S&P before we get out of here really quickly. So this is the thing that's getting headlines in the markets today. And actually, Guy, from folks that you wouldn't normally think are putting up hyperbolic headlines. When you start seeing something like this, we had a chart or some bearish sentiment readings, first the lowest in 30 years. You start seeing death crosses, all this sort of stuff. Do you get like spooked out? Do you get spooked?
I think, first of all, there are very few things that scare. The dentist used to scare the shit out of me because my father used to take us to a gentleman named Dr. Sini on the east side of Manhattan who did not use or did not know about Novocaine. This is not a joke. He looked like the guy from Marathon Man, if you remember that movie with Dustin Hoffman. Absolutely terrifying experience. Got to the point, though, where, you know what? I was just saying to Amanda and the guys and gals before you got here, it's like that scene in Good Will Hunting when Will is talking to Robin Williams and saying how his father used to beat the shit out of him, and he would give him a choice between a belt or a fist or a wrench. And Matt Damon said, I'll take the wrench. And that's the way I used to be with the dentist. Like, you know what? F it. You don't want to use Novocaine? Have at it, big boy, because I ain't going to scream. But I don't even know how we got there other than
death
cross. Death cross. It doesn't scare me, but you got to take notice.
Man, that scene in Marathon Man is truly frightening.
Yeah, that's a terrifying movie.
Dustin Hoffman, he's a great actor.
Great actor. People don't realize.
He doesn't do a whole heck of a lot anymore, but
he's
he was a great actor. All right, let's just rank your favorite Dustin Hoffman movies. I mean, mine up there, number one is The Graduate.
Yeah, well, that's old school.
Above 1969, The Graduate.
Whatchamaface? Tootsie was a Dustin Hoffman movie, I believe.
Oh, that was great.
But I'll give you the best one that you
put him in the chat.
Remember.
We want to hear what you have to say.
Papillon with Steve McQueen.
Papillon. Oh, that was a great one. He
great
was like what about
Rain Man? Look at Carter.
Rain Man's amazing. Oh,
Jay Luther, Rain Man.
What about
Mike B. Rain Man?
What's about
what's All the President's Men?
Oh yeah,
that's what I just said.
Papillon.
Accidental Hero.
What about the movie with John Voight in and it's something Cowboy?
Midnight Cowboy? What was it called? Midnight Cowboy, right? Straw Dogs by Jet Solroon. Papillon is great. There's a fucking L in Papillon, Luther. Respell it.
He was in this movie. It's not one of his best. Do you remember Billy Bathgate?
Yeah, sure.
He was like
Midnight Cowboy.
Gangster, Midnight Cowboy. There it is.
We're getting Mrs. Doubtfire. He wasn't in Mrs. Doubtfire.
That was Robin Williams.
Fucking tool. Broderick Crawford's was better. Which super bad. This is
I'm gonna go to. I can
do this all day long.
Dude, he's been in a shit ton.
By the way, since we're in a good mood here, Amanda pulled up a picture of me at Soul Cycle years ago. They sent me to a Soul Cycle to be like I don't know if we can pull that bitch up, but look at that. That's G Swizz. That's post.
By the way, Amanda, can you bring up when Guy did the Iron Man? Like Guy did a full Iron Man.
Yeah,
there's a great picture, and there was actually a write up in the New York Times about that.
Great, right? We'll put it in the show notes. We'll put everything else in the show notes.
Really quickly. So, actor. All right, so you ready? Jeez, he hasn't done a lot of good movies lately. Let's be really.
Well, he was in all those movies with De Niro and the whatchamaface. That's a great article.
Wait, which one with De Niro?
The one, Meet the Fockers.
Oh yeah. His character kind of sucked in that. Like that was
a Focker.
I mean, that's some funny stuff. I just want to go through this really quickly because I think this is important. So some of his, I think we got most of the main ones, but I think there's a couple sleepers in there. I think he won an Academy Award. Didn't he win the Academy Award for Rain Man?
I don't think so. Was he in like? He wasn't in Sophie's Choice. Tootsie, I said.
He might have won. He might have won for Tootsie.
Kung Fu Panda. I mean,
yeah, he was. That's voiceover. You know what they do? That they just dial that in because they just get, they get paid.
I should do voiceover work.
He's been miscast though from here and there. He was like in this movie, The Messenger. There was a couple other.
So
weird
Amanda's saying, "So we're done."
Oh, Ishtar meant to be one of the biggest bombs.
Yeah, that was with Warren Beatty, I think.
Yeah. What else? I think there's a couple sleepers in here that we'll
bring it.
Kramer versus Kramer.
Kramer, that's the one. That's the one. That's the tear jerker. Kramer versus Kramer.
Oh man, yeah, that was
over this. Let's wrap. Timmy, everybody.
Massive underrated movie. Wag the Dog with De Niro. That movie was awesome. Do you remember that one?
It was a politics movie, I think.
Yes, it was based on like the '92 election-ish. But all right, I think we can do. All right, here's the deal. I think you got to put up All the President's Men, Rain Man, in the modern sort of era, right? I think those two are probably. Well, that was early. Tootsie is in the top 5. Kramer versus Kramer. Marathon Man. The Graduate. Marathon Man and what was the one? They're kind of like peripheral sort of things, you know what I mean? But I don't know. Oh, Midnight Cowboy, listen, great actor. Dick Tracy, not a great character. I mean, I don't know if you remember that one.
Yeah, no, listen, I think Madonna was in Dick Tracy and Warren Beatty was in that too.
That's when they were dating, by the way.
Madonna and Dustin Hoffman, I didn't know they dated.
No, Madonna and Warren Beatty.
I'm kidding. All right, Amanda wants us out of here. I'm sorry. That's it for Market Call. She's got to get some lunch. Timmy's going to make some pictures of something. I don't know.
Something goofy to put on the web.
Amanda just sent a picture of, I can't tell what that is. I think it's a pregnant woman.
You think?
I can't tell. It's an emoji.
Amanda, without doxing her, is a pregnant woman. So
yeah, people know that. People know
everyone
this.
knows pregnant.
All right, thank you for joining us.
Thanks, everybody. We'll see you tomorrow, 11 a.m.